Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market powered ahead last week as what was a very hot trade war cooled. President Trump came out and he delayed the tariffs that are scheduled for October 1st by 15 days. And what he says is a sign of goodwill. And China removed some tariffs from a few products, including soybeans, which had a very big upside move, which we were expecting. Early week, we got a dip on Chinese and the Eurozone data, which was pretty weak. But that didn't last. And Wednesday, Thursday morning were notably big upside moves as after the close on Wednesday, we saw futures jump as that delay came out and regarding tariffs. And also there was a report out of Bloomberg that there was an interim trade deal coming, which later was denied. But just a tiny little whiff of anything on trade or anything positive, and the market launches to the upside, and that is the nature of a market that is quite strong. This all kind of is meaningless, really, all this information about tariffs and all that, when something else really important is going on, and that's a huge allocation shift. As investors, fund managers move from growth, that's those stocks that seem to earn money constantly and keep going up in value, well, moving from growth to value, where the value stocks are the ones that were kind of beaten up or that lower PEs and haven't moved, and there was just a huge switch. And the stocks that seemed invulnerable to declines over months and months, well, they got hit pretty hard. And the third tier, the Russell stocks, the lower price stocks, and a lot of these beaten up stocks had big upside gains. You can look at Apple, what happened on Friday. The stock falls $5, and the market barely flinched here on Friday. And usually a $5 down day for Apple would be pretty meaningful. For most of these stocks that got some pretty good gains, it was the shorts that scrambled also. And some of these patterns, and if you go back and look at our Thursday video where we talk about this, and especially the financial stocks, some of these really look like they're gains within some negative patterns, and some of them look like, well, the stocks have revived. And that's what happens when you get these big allocation shifts. You get the market that moves up, and it moves up by buying the stocks that investors think they missed. Essentially, fund managers, they're searching for alpha, and they want to be into the stocks that have a better upside potential. So that's why we see these stocks moving to the upside that were just seemingly languishing. I'm going to show you a few of those stocks in the best of the week coming up. So what's really important to talk about also is that all of this, seemingly desire for risk and in stuff that was seemingly unhealthy, that had money moving into the bond market, and now that has changed. The bond market had a horrible week, one of the biggest downside weeks or biggest upticks in yields that we've seen in a long time, and that's shaken up gold and silver too. So those things that were getting bids because of these incredibly low interest rates and because of the prospect of the Fed being even easier following the ECB, which came out and said that they were going to add back QE, a lower rate than they did before, and move interest rates down, and they're at minus 0.5%. Just incredible. After all that, the bond market gets hit in a very big way, and maybe investors are starting to look at the fact that maybe the recession isn't coming, and maybe new highs in the market are meaningful, and they're just spitting out these safe haven bids that they had in a very, very big way. I'll show you that when we get into the short-term view, when we look at the bond market. Now with the stock market within striking distance of its July high, and even with these bigger, widely held stocks languishing, it's so close to the new high that taking out that old high seems nearly a certainty right now. FOMC meeting comes Wednesday, and based on what was a almost sure pricing of a rate cut coming up, now with the bond market giving up this much ground, well, maybe they won't cut rates. That could keep the market a little bit nervous at the moment, but right now the direction clearly is up. I want to give you a little picture in here. Our overall sense in the market was that it would have a dip into October and early November, and actually maybe more than a dip, but a big decline, and then begin to move up again into the early part of next year to make what we think is an elongated bull market top. We still think that's happening, though when you get an extension of the rally as we're getting right now, we do have to look at that data and say that something has changed. We're bull-bear agnostic here at askSlim. We're just going to take the data and we're going to look at how the information tells us to project the highest odds going forward. Well, the odds to us are still that we're going to get a decline based on the intermediate patterns into October, November, and that could be kind of steep and a shakeout, but then we think we're going to see higher prices. I'm going to give you a little picture of our bigger picture analysis in here and show you a monthly chart, one that I don't normally show except to our members, but you'll be able to see the unbelievable rhythms in the markets as you look at this chart right over here. This is the chart of the S&P 500 on a monthly basis, and I'm going to walk you through this and you'll be able to see what we're looking at. So you could see in here the 2000 peak and then the bear market there, and note right in here the cycle length. Cycles are measured from low to low, and you had this 2007 peak in the bear market that came into this nested area. You had the mini bear with that double downside pop to about maybe 16-17% losses right in here, and each of those made up of kind of half cycles that are fairly clear. And you can see the half cycle right over here that made this low last December, and then the market started to move up. Now, I'm going to get a little closer look right in here, and you can see that, well, you'll be able to see that in a second. There you go. That this rally right in here, which began last December, this whole year, throughout all of this noise and downticks and all that, the market has been in this uptrend. This is the slim ribbon, and here's where it turns positive momentum at around 2,000 in the S&P, and it remains even through this break into in positive momentum, and almost no downticks right in here. So our thought has been that even if we get the intermediate decline that we expect into October, November, that there was still a pretty good shot at this target zone up in here, which has a resistance up at about, we'll call it 30.50, and then this one right up over here around 32.50. That would be our target for the first quarter of the year on the upside, based on what are long-term monthly bullish patterns, with the potential for this decline into this, very often risky period, October, November, being just a blip, another blip on this monthly chart, which is showing you it's continuing to move up. Of course, when this is over with and we get done with the rally in here sometime early next year, then we think the bear market hits and this huge decline coming way out into 2022. So I wanted to give you a little picture of the cyclicality in there. You don't believe in the bear market or that big decline coming? Well, just note that when you have the second half cycle right over here joining up with the dominant cycle low period here, which is in the middle of 2022, that's the same thing as happened right in here. The big break took you down into from the peak in 2002 down into 2003. Here, the 2007 peak down to 2009. You can see that. So nested cycle, huge break, next nested cycle, huge break, nested cycle, only about a 17% break. And then this one coming right here, which we think is going to be a very large decline in there. Of course, we have it projected down here to 1500, losing about half its value, which would be a little more than the average bear market, but we still think a real bear market is coming during that time frame. So I wanted to share that with you, the monthly patterns in there that I think are very important, and that while we have believed that the stock market would be peaking and going into a correction, we still don't think that that is the top, and we still think that there is a topping going on right now that will extend well out into the beginning of 2020. So I wanted you to get that picture of what we're looking at. So while we have a market in here that barely has been able to give you a downtick, we have some things in the shorter term that have changed. And I want you to see that because we're always looking at these changes and be able to change these projections. So you're going to want to see our short-term view coming up at the end of the show. Stocks, they were gaining, and the index is widely different actually, because while the NASDAQ gains about 1% and the Dow and the S&P 500 around 2%, the Russell, those low-priced cheapies, that's up about 5% on the week. It's an enormous move and catching it up to these other indexes on the upside in a giant way. The bond market, 5 days on the downside, a collapse essentially going on in there, and the 30-year down about 6 points. That's a big move, and the 10-year yields up 33 basis points. That's the biggest move in a week we have seen in a long, long time. And the 2 to 10 years up around 7-8 basis points positive, so that what was an inverted yield curve is only inverted now from the real short end, as the twos and the ones, they all uninvert. And all of that has the gold market nervous, the silver market nervous. Gold down about $15. That's about 1%, while silver lost about 3% on the week. The dollar down about 0.2%. And to us, what we're looking at there is a breakdown, and I'll show you that also in the short-term view. So while the dollar was a safe haven, and the dollar and gold were moving up together, which is unusual, now they're both correcting on the downside together. So they're correlated positively. We don't think that's going to remain, and what we think will happen will be the dollar will go into a very sharp decline, and the gold market will do better. A little bit out there, maybe a month away or something before that really takes a hold. Oil market, that had a wide range, traded up near $58.75 and then closed down around $55, down about $1.80 on the week. This was all about starting out the week where OPEC said, well, they're going to maintain their cuts. And then the president fired Bolton. And Bolton, who has been a hawk and getting in the way of what the president wants to do regarding talking nicely to Iran. Now the concept that is hitting the markets is that Iran oil will be flowing again, and that's why the wide range and why oil is moving down. Besides that, the patterns have not looked great, and we think oil is still going to go lower. And I'll talk more about that at the end of the show and in coming weeks, of course. All right, so we're going to show you in a moment what our best and worst stocks are for the week. And I hope that that analogy was looking at all of these longer term patterns was important to you, don't forget, go to askSlim.com. Right now, you can go there, become a member if you're not a member, and follow me on Twitter at askSlim, and become a YouTube subscriber. And you like the show, give me a thumbs up. See you in a minute.
Here come the best stocks for the week. These are stocks that had big rallies, usually driven by good news. Watch as Slim shows his cycle analysis and discusses if there are more gains to come, or if the odds are high these upside moves are selling opportunities.
All right, we're going to get to the best and worst stocks for the week. We look at cycle analysis. For those of you that are new out there, cycle analysis is looking at the rhythms of the market. We look at the, essentially it's a visual, observational way to see flow of money in the markets. When markets are rising, essentially lows are higher. In other words, you have a rally and then it comes down, corrects, and it's a higher low than previously, and then the odds are pretty good it's going to be moving up again. Sometimes you get bases that form, and then the stocks are done moving on the downside. And AK Steel may be a good example of that. AK Steel, I'm not going to show you. It's only a $2.80 stock. But that was our biggest gainer for the week, about 20% on the upside. Now I'm going to show you a couple other material stocks, because material stocks did the best were the best group for the week. Alcoa in our 320 stock universe was the biggest one of the ones that we actually trade and can follow, and that was 20% gain for that stock is massive. And the stock's been in a very, very bad downtrend, and now things seem to be changing. In our whole universe of stocks, there were 27 stocks that had 10% or more gains, which is big, and that shows you the kind of movement we're getting in stocks that were very depressed on the downside. So take a look here at Alcoa right now. You can see in there, this has our colored phasing in that. Essentially what we want to do is we want to look at the cycle rhythms in here. Note the dashed line in there. The dashed line is DBB. That is the base metals. So you can see that the base metals and Alcoa trade very close to each other. And it's important for you to understand these correlations if you're going to be a trader. Now, something unusual just happened. First of all, you'll note that this low right over here was lined up perfectly, right? And then you will see the low expected right over here, and this ran late. Well, usually when it runs late, it tells you the condition of the market is still very bearish. In other words, sellers are aggressive. They don't go away, and these patterns run long. However, occasionally what happens is that the original bottom that was expected or projected out here then becomes the right timing. And you can see the bottom came here, which would be early. That, because this cycle right in here is very short, and look at the size of this uptick. So all of that to introduce you to what I think is a stock that's making an important bottom. Here is Alcoa. I've zoomed in a lot. This bottom starts this green phase, and a lot is about understanding the shape. So we're going to project right now Alcoa to continue on the upside, and this to potentially get up to $27, which is right up here. That's a major resistance level, around $27. And Credit Suisse upgraded this stock, interestingly, and they have raised their target to $27. So we're in agreement with them on this. This is a pattern that is definitely improved, and if you believe that the investment managers are changing their asset allocations to things that were beaten up for a long period of time, well, you could see clarity in this one, how this is continuing to or was continuing to move down, and now essentially is really looking like something is changing in there. If I connect the highs of these cycles coming down right over here, that's called a VTL, or valid trend line, and you can see that it has now broken out of that. We think Alcoa is going to go higher. And given a little downticks in there, I think it's a one to take a shot on. Here is U.S. Steel. Look at how close that looks. The in line with the DBB, that's the dashed line. The fact that it ran a little bit long in the previous cycle, ran short in this cycle, and is now moving up. So U.S. Steel getting solid buying coming in there this week as this gains 14% on the week. We could see this moving up to, well, this is 1380. This was right up here around 1471. That's very reasonable to expect. This high right over here at the last cycle peak is 1582. If it got to there, well, then the base would be forming and we would be looking at a much better situation. But this does look good. We think all steels are making bottoms, and here's Steel Dynamics up 15%. And this group to us looks bottomed and like it will make some higher prices. In the teen retail category, they're the next that we're going to look at. This is Abercrombie. The analyst upgraded Gap stores, and both of those got some pretty good upside gains. Now, note the Morningstar right in here. Often you get at peaks and at bottoms important cycle patterns that you can see. And this important important candlestick patterns. And this morning star right over there shows up right at the point where this looks like it's supposed to bottom and then turns up. So what we're doing is projecting the next cycle out, which takes you up to the resistance area, or in this case, the sell zone. The sell zone is there because of the negative configuration, but it's still a pretty good area to target, up to $20 to $22. We think that's going to have a nice additional run. Morningstar says it's over on the downside. You can see in here the peak right in this cycle, and engulfing a pattern right over there, a tweezer top that formed right over there. So all of those candlestick patterns that signal changes in cycles. This actually was one right over here. It was a big engulfing pattern. I just don't have it marked. So all of this says the stock is likely to go higher, and we would be a buyer here in Abercrombie if you are an aggressive trader. Again, that sell zone is there because overall long-term patterns are still not great. But if you're a trader or swing trader, well, that shows you that these are stocks that could bottom. You could see the same thing here in Gap stores as it gets an upgrade. Here's your Harami and bullish piercing pattern right over there. And you have just a great look here at, this is an evening star right there. So I'm just going to take this and swap these because I put them in the wrong places. So I'm just going to do that because I want you to see the evening star right over there that made the peak, and the dark cloud cover right in over here that made the peak. So we're kind of focusing on candlesticks right now, and the candlestick patterns right here that made the bottom, and that bottom in place and moving up we're looking for. About 21.5 to 23.5 on the upside in Gap stores. This looks like an important bottom made, and I would look for maybe a little pullback in here because they were big moves, but then I would say they probably have more upside. It looks pretty clear to me. So Mosaic, MOS, is the next one we're going to look at. This is the fifth stock in the group. And this one, interesting, has a big move. Maybe it's related to the soybean move in Mosaic, a fertilizer company. And this stock, in our opinion, is bearish. Now, it gets this big, giant upside move, but it's happening in the middle of this cycle that already had a breakdown. So you can see the clarity and the rhythms in here, where there are a dominant pattern and then minor thirds that appear in there. Here's your first minor third and your rally in the second minor third, and this is very likely to fail. So we're looking for a shorting opportunity in here in Mosaic. We think that between now and December it's going to move down. Interesting, on Friday, JP Morgan came out and cut their target on the stock, and we say sell. So we're in agreement with them, and that is the best stocks for the week that I'm going to show you, and I think some good opportunities that exist in there. And I'll be right back with some that, well, not so good.
Coming up are the worst stocks for the week. There are some real stinkers here. Some of these are breakdowns or extending losses in really bad chart patterns, and some present great buying opportunities. Watch as Slim makes that all clear to you with his very unique analytical style.
All right, so for the worst stocks for the week, the metals, the gold stocks, silver stocks, they did poorly. With the bond market breaking in a big way, that which was supporting the gold and silver market with lower interest rates kind of went away this week. So that group of stocks got sold, and it had gotten bought in a very big way before that. So we're going to take a look here as we switch over and look at AU. Anglo Gold is a stock that it's really followed by a lot of traders. I like it. I mean, the cyclical patterns in there are pretty, and we'll take a look at that right here when I get that placed up for you. All right, so here is AU Anglo Gold. Note in there also the evening star that formed right in this area right here, which clearly makes the cycle peak. So when we see that, and we see that it is moving down so sharply, we see the support zone in here, but it's given up a lot of ground, and we think that the decline in here actually goes out into October. So this stock moves down 9%, and we still think there is more downside in here. And overall, that 2385 number may prove to be a peak that we're going to see for quite a long period of time. I do think gold and silver are going higher, but I'm wondering about the corrective pattern out into October that we see in there, and this right here. Now, there's a potential for this period to get up here and go back up to that fib extension around 25. But 24 or so peak, 25 right over here. It's not a lot more upside that we see in here. The opportunity is coming in a few weeks. We think that the gold silver correction will be over then in a few weeks, and this will be in this support zone, and then I think it's probably buyable for traders in the 18 to 19 area. It's trading right now at about 1916, so it's not all that far from there. We don't expect a lot more downside in there. The question is that opportunity in October, November for a rally, if that's going to be able to get it back up to near $24, $25. There's a possibility of it. You can see the way we have it drawn is essentially the highest probability where the next rally won't make it. It looks a lot like this cycle that you can see right over here. So we're kind of following that pattern right there as we make the projection, but it could be better than that. Again, 1819 looks to us like an area to consider buying, and I'm not in a hurry. Let's give it a few weeks in here before we do that. Pan America down about 7%. And the GDX down about 5%. That's the gold miner ETF. And we think GDX is a buy around $26. So similar pattern, and getting down close to the support areas. CSIQ is next. And this stock is a stock in the solar category. Now, look at this pattern. It's come down to the buy zone, and it looks to us like it's got a brief period of time. This is about 2 or 3 weeks right over there. This group, I believe, is really in favor and will continue to be so. And if we're correct, and this support buy zone area, which comes into this, right around between high 19s and high 20s, that if that holds, then this configuration, this positive configuration, is likely to get you to new highs. So we think this stock is a buy in this $18, $19, $20 area. Well, 18's a little low, sorry. Around 20, 21. Let's restate that. 20 to 21 is the area that we think is a buy. You'll note the 34-week moving average has given it support moving up. So this stock, in our opinion, is a buy in this area, and we would maybe be a little bit patient, but we think that you're going to see higher prices in there. No news in the buy zone, really liking that one. So, like I said, some of the companies that are in the category of the widely held growth stocks, the ones that have been moving up in a very sharp way over months and months and even years, they started to get sold this week as fund managers were liquidating to get some money to buy some junk. well, the junk that they think can get them to move. So this next stock I'm going to show you in the credit card company is a good representation of what we're seeing. This is MasterCard, and MasterCard gets this sell signal, but it doesn't have a lot of time left to decline in the pattern. You note in here the brief declining phases right there. You see that little one, this little one here. This, of course, was a big one, but it had a lot of time after the peak. You'll notice that. Again, a big, what they call right-hand translation, and the same thing going on right here. So this is an engulfing top right there with about 2 or 3 weeks to go on the downside. We think this is important, and that 293 level will not be surpassed. We're getting into a period in this right out over here where it could rebound in October, November at some point. That's contrary to where we see the stock market moving, so not exactly sure how this will line up, but it didn't matter because when the stock market had any breaks at all, the stock didn't move down. So kind of a life of its own. They love to buy this one. This was on my list of riskiest for 2019 because of valuations, and this was completely wrong. Not only valuation, but this negatively configured pattern right there. That said to me the odds were high the next one would be a break to the downside. Well, that was clearly wrong, and this was not a stock that was the riskiest for 19. In fact, not only is it a great move, but it's one of the best moves. And this break right over here doesn't have a lot of time, like about 2 or 3 weeks further break. The same pattern exists in Visa, almost identical. MasterCard, Visa down about 5% on the week. Square is down 6% on the week. They all bottom in the next 2 to 3 weeks. Square's pattern is a clear breakdown, and I would not be looking for a reason to buy that one. I would definitely look for a rally to sell in Square. So credit card companies, they're the ones that were the one leading on the downside this week with a couple other groups. Twitter is a stock that broke also. Our projection in Twitter was $46 to $48. We had that from way down over here, and it got right up over here to about $46. Now gives you the dark cloud cover. This looks like it's going to break for a couple of weeks also. You can see that. Now notice the minor thirds right in here. You can see that. So the low due sometime in October, and then we think you're going to get another rally. Our buy zone in here is 38.5 to around 41. Pretty wide, but we think a few weeks into that and down into that zone will give another nice buying opportunity for another pop to the $46 to $48 area. So a little bit of patience and we'll be able to get a good buying opportunity in there. The next group I'm going to talk about is the restaurant stocks. Now, what happened in the restaurant stocks were that Wendy's, they really gave a poor guidance, and the stock got slammed, and that drove down the restaurant stocks. The two I'm going to show you, the one I'm going to show you is Starbucks, because that's one that we look at a lot, and I know a lot of our members trade this one, and Starbucks, as you can see, we believe has peaked. Now, the projection in here takes it down, much more in alignment with what we think about the stock market, that it has that downward movement into early November. And again, here's your support zones, 34-week moving average coming up into that area right over here. We think the stock is going to move down to 87 or lower here, maybe down to 84 in this looks like about 5 or 6 weeks in there for Starbucks. Chipotle, Yum Brands, both down about 5% on the week also, and we think there is more to the downside in those stocks in alignment with what we see here in Starbucks. So I'm kind of bringing you a proxy for the group. When I look at Starbucks, same thing when I look at Anglo Gold, just trying to bring you one that lines up with the pictures that we see in a lot of these other stocks. So that pretty clear, where you see the stocks that they loved and all of a sudden they're selling, and the stocks that they hated and all of a sudden they're buying. So this big swap going on, and that's just the nature of a market that is, well, we'll call it thrashing. It just kind of just finding its way higher and with just a lot of movement within the sectors. And we still think that the stocks that are driving the market now will get it back up to the old high, and then of course in the beginning of the year beyond that. So we just want to see this one big corrective period in October align properly. And I'll be right back with the short-term view for the coming week.
Next is Slim's short-term view for the coming week. Watch as shorter-term charts are used to project 5 major markets in price and time. And there is also an emphasis on momentum to help keep positions set with the highest odds of catching the biggest short-term moves.
All right, for the short-term view for the coming week, before I get into that, I want to remind you to become an askSlim member. Please do go to the askSlim site. You'll go to membership, and you'll be able to see all the opportunities in there. Our daily snapshot has become unbelievably popular. All you have to do is become a level 2 member, and you will get those charts every day in the morning before the market opens. If you're a day trader or a scalper, short-term trader in the markets, these are just unbelievably important. Of course, our level 3 and level 4 members get that, and our level 4 members get it as a live chart on the Thinkorswim platform. They can just simply put that up and see the key support and resistance areas on each daily basis for the 3 major indexes, and also get our acceleration zones. So the key to success is being able to know where there's a highest probability of the impulse in the market, where a market is going to move in a big way. If you can get on those trades, then your wins are going to be bigger than your losses, and that's really one of the keys to success. So many short-term traders have a malaise of having their losers be much bigger than their winners, and we want to help you with that. Of course, at the same time, if that's going on for you, it could be some psychological thing going on. So make sure you go and watch the workshop, 5 Essential Building Blocks to Successful Trading, where I talk a lot about that also. So lots of things here at askSlim. There's so much to look at. Please go to the website and just look at our navigation on the top, in through the memberships and the workshops and the coaching programs, and you'll be able to see everything we offer. And we have a very large team that's starting to develop here to really run this and develop all kinds of new things that have come and are still coming. So take advantage of that and subscribe so that we can keep this team going and keep these new fantastic products coming to you as we have been doing regularly now. All right, so we're going to look at the short-term view for the coming week. I want to be accountable to how I did in the last week. I'm going to rate myself as a substandard week. I try to be 60-65% accurate on projections and patterns and net changes, and this week was 45%. It was certainly not my best week. The one I really went wrong in was the stock market. And while I thought the bond market would have some downside movement in it, I did not really get a good sense for the amplitude of decline that we could get in there. So 45%, and I'm going to do better in the coming week. So we're going to switch over to the daily charts, and we're going to start in /CL. And this is short term, so our short term view is always looking at dailies. However, in our work that we do in the charts that we share with our members, in level 4, we also do 2-hour charts, and there's a lot of really powerful information in there. And then for the indexes, we do 15-minute charts also that are so important to that scalper day trader analysis. So let's take a look here as we look at light crude. And you can see that we had a big upside move right in here. It got up to 58.75. You had this big evening star, and now has begun to come down. So we're looking, because this decline in here got down to that 78.6% level right there and that lower support. That says that the probabilities are high that when it moves up again, it's going to get into a sell zone or a resistance zone. The background news, in my opinion, is not bullish for light crude. If it was bullish, if any part of it was bullish, it was OPEC trying to keep their cuts in place, but there is massive supply out there, and now with the potential for Iran supply coming, well, we think this market's had it and it's going to be moving down again. So we're going to be looking for an early bounce in here. Now I want you to note that the momentum has been totally choppy. When the slim ribbon is close together, you don't have any faith in momentum, and now it's crossing again over here, so we're going to call the momentum neutral. We're going to look for a small week overall where it rallies and fails and then comes back to somewhere in this range of this closing that we're getting here on the week. But then the following week over there sets up a big break in here, and we think it gets to 53 or lower coming in there, and we think this sell zone is very shortable for active traders. We would not even think anything was changing unless it got significantly over 57. So we'll be looking for this to just nudge up into that area and then have a break. We'll call it a small week, but really setting up what could be a downward bias coming after that. The gold market /GC, and by the way, light crude, we got almost, perfectly correct. It was a slightly higher range than we expected. Now here in gold, this one we don't get a lot of credit for. We only get a little credit for the pattern, which we thought was going to move down and then move up, which it did, but the upside has really been not good, and the downside was bigger than we thought by about maybe $8. We thought it would get down to about 1,500. It got down to 1492, 91. And this bounce in here is very feeble. That gets me concerned. The way this pattern sets up, you could see we're looking for a small rally sometime right in here, get back up above this 1530 area, but we really don't think it's got a lot of upside. We're going to call it a small week, and then more corrective process comes in after that. So there's an opportunity potentially coming for this area down over here around 1460, and that might be out here in a few weeks. Which was kind of the low end of the range that we expected the buying opportunity to come. It took so long for a correction to set into place in here, but now it's set in place, and this bond market coming apart is not good for it. So that's why we're seeing all this pressure here as money moves into junk stocks and out of gold, and that's, in our opinion, a mistake in the long term. But still in the short term, you could see it's not able to get much going, traction rise right over here when it should be based on these patterns, and that's usually a sign that there's not a lot of upside in here. We're going to look only for a small upside week that probably will not be able to hold and then move down again into the lower portion of this support zone further out. Next thing we'll look at is the dollar sign DXY, and you can see right here that this looks to us like it is breaking down. So here's your nice cycle rhythms that you can see right in here. The gray is the old one, this is a shifted one, and then you get down under this level right over there and then pop back up. So this is kind of a breakdown, but not convincing yet. And if it would have kept going up, I would have said no breakdown, but now it's coming back down to that zone again. And that says to us that look for, if a breakdown hasn't had yet on the short term below that level, it's coming. So we're looking for downside in here. We'll call it a down week. We think that it'll get down to 97.50 down over here, potentially down to that low that it made over here at 97 even. So we would be shorting the dollar here, and that will potentially help the gold market, which we think should begin to inversely correlate again. So hopefully this will come down as expected. The gold market will be able to get the bounce as expected. We'll call this a down week. Momentum, I want you to note, is still up, still positive, and starting to soften and roll over. So we'll be looking for a downward cross in the momentum to be coming in this next week, and we'll be looking for lower prices in the dollar. We'll call that a weakening market, and potentially, if you watch our longer term analysis in future speak, a market that could be setting up for much lower prices coming out in the next quarter. So that is a look at the dollar /ZB. And this is the bond market, and look at that break. Gets down into this lower support area, and it's just holding right in here right now for a few minutes, but it has been under a ton of selling. Now, the momentum turned positive right over here, and that got you from 156 up to 166 right there. The momentum neutralized right over here, and that is a sign that there is trouble. Now, what that means is that a negative momentum, which occurred here, says that if you get a rebound in here, it's very likely to fail. So look at the time frame in here. This low points to the first week of October, so that's about 3 weeks away. That says that bounces in here in the bond market are sells, and that they would be good opportunities where we're to get them to get lower prices still. The bottom of this support zone is around 155 3/4, 155.25 or so. So that's a lot of downside still. So if we get that bounce, I would be a seller in there, and I would look for opportunities for traders to make money on the short side. So we'll look for this coming week to be choppy. Try to rebound, not really get anywhere. But that momentum is telling us that there is trouble. So we'll just call this a small week when it chops, and then setting up each rally for a shorting opportunity. Much weaker than we expected it to be, and a much weaker condition than the market has been at all. And you really got to wonder what the bond market is telling you. What kind of a change is occurring in here when you're seeing interest rates move up that sharply? On Wednesday, when I did Future Speak, I talked about the bond market and showed the levels where I thought interest rates were going to pop up to. They have now moved up above that and a broken key trend line, key VTL, which I'll show again this coming Wednesday. And that says to me that this whole concept of lower interest rates or zero interest rates and all that may just be going out the window. So we'll see how much that changes the market environment. And something significant is going on here in the bond market, and I'm going to be doing some deeper analysis on that in a big picture coming forward, because there's something that we really need to know about this for understanding the correlations in all of the markets. So I'll be working on that. So watch for that big picture on the bond market coming up in probably the next couple of weeks. All right, so now we're going to switch over to the stock market. I thought the stock market would dip. I thought it would come down to about 29.48 and then go back up again, and that the rally would take you out till about the third week of September. So what's happened is that there's a change, and that change is such that the window of opportunity in this normal patterns for a correction or for a decline is past. And like I said in the beginning of the show, our job here and our philosophy at askSlim is that we're going to take the data all of the time as the market changes and use that new information for important projections going forward. We're bull bear agnostic, and I'm going to remain that way. And as the markets speak to us, I will then bring that to you. We do even shorter term analysis on our daily snapshots, and when something changes on there, they give us indications of that. So you'll be able to see that if you look at our daily snapshot when things change. Right now, everything is positive. Momentums are positive, and even in the weekly patterns, which were negative, are now momentum is turning positive. So with some of the evidence being that opportunities to correct are not being missed, and momentum turns positive, then we have to look at that and say that is what's going on. And that's what I've been doing the last couple of weeks, pointing out important things that have happened, like what happened a couple of weeks ago when I said there were 3 gaps there, and we have to look at the power of those. So here was the first gap right over here. It ticked back down on a gap, but then we had the double upside gap, and I kept saying there's something really strong about that when you get it, and of course moving up. So now we have momentum turned to the plus side in here in the short term, and what was a window to correct out over here, just missing that, where you got only this tiny little blip that is so strong. And with this strong upward momentum in the slim ribbon, there's not a lot of likelihood that there's going to be any declines of significance. So this right over here is the old high at around 30.28. There's a resistance, there's a fib extension right there at about 30.43. So those are the important levels that we'll look at. There's some higher levels up here, and in the beginning of the show I showed you some levels at about 30.50 and 32.50. So this 30.43, 30.50, that's all kind of an important area there, and that's the area that it really looks like we're going to get to. The current situation is suggestive that any intraday declines probably will not hold. There's a rising support zone right in here, and this goes out for the next week. So we have the FOMC meeting coming, and it's likely to be slow and choppy in here getting into the this FOMC. And then this rising support being really a buy zone, because positive momentum would just dip into there maybe towards the end of the week and then be moving up again. So we're just going to call this a choppy week with a pretty good likelihood that this upward momentum is going to be meeting the resistance over here, and it's going to be squashing these days while we're waiting for the FOMC, with ranges really, I think, coming in over the next few days. I don't think we're going to see a big range at all, and I think that a dip into this support zone, which comes down to about 29.95 to about 29.87, the bottom of it around 29.80. So 29.80 to 29.97 looks like about the area that we could get a dip into. That's not very far down, and then moving up again. And this rally right over here should take you out to that third week where we think implied volatilities, third week early in the fourth, where we think implied volatilities are supposed to then begin moving up, and then the bigger correction that we think goes out into October, maybe beginning of November. So the patterns, the timing of everything remains pretty much the same, except these harmonic families shortened by 1 bar and 2 bars, giving you this low, and you'll be able to, our members now have gotten this change in these charts, so they understand that we brought this in by 2 days, and the extension that we had put in there, or the shift, we took back out because it's just not following that pattern. It's following the one that we have in there now, and therefore it's just very suggestive of of a more positive situation. And that's why we think that somewhere either here, early part of the week and then move down, or more likely out over here in this coming to that third week of September, we end up with a new high in the S&P 500 at that point. And I think the new high is going to fail and then give you this corrective period out over there. And maybe these higher interest rates, maybe this weak bond market is going to start to get people nervous. Maybe the housing stocks won't be able to go up because we won't get, these lower mortgage rates won't hold, and mortgage rates had a pretty big upside week going in here. Maybe investors will just start to wonder whether or not their allocation switches are smart things to do. I actually don't, because they're doing it in so many stocks that are looking pretty junky to me. And overall down the road, I think we're going to see a lot of two-sided trade. once we get past this third week of September and we start to get into this corrective period where we always get into better situations for traders, and I think that is coming for us. So that is it. That's the Market Week show. I hope there was a lot of great information for you in there, and I want you to be very careful because it is so crazy out there. We're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been